time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold.
So we received a question from one of our listeners regarding NVIDIA. It's a company that we've covered or we've followed quite closely in the past. We never actually had an official recommendation on it, but one of the best performing tech companies over the past several years, until recently at least. NVIDIA Corporation, the symbol is NVDA on the NASDAQ exchange. It's trading right now for about $137, and it's a $340 billion market cap company. NVIDIA is the world's top designer and manufacturer of GPUs, or graphic processor units. And these GPUs are used in high-end PC gaming devices. They're used in data centers and also in automotive systems. In recent years, the company's GPU technology has also been applied to the development of complex artificial intelligence systems, including autonomous driving. A little bit of background, NVIDIA was the top performing tech stock for the period leading up to one of the top performing tech stocks in the period leading up to November 2021. Since then, the stock price has come down hard, as has been the case with many of the company's high growth technology peers. NVIDIA's stock price is down 60% from its 52-week highs back last November. And the stock is also down 24% since it released its Q2 results about 2 weeks ago. We took a look at the quarter, and at face value, the quarter did look pretty ugly. Revenue was $6.7 billion, which was down 19% compared to the most recent quarter and up only 3% year over year. Operating income was down 67% and 51% respectively compared to Q1 of this year and Q2 of last year. And non-GAAP earnings per share were 51 cents, down 63% from Q1 of this year and down 51% from the same quarter last year. So these are some of the weakest numbers that I've seen from NVIDIA in many years. But the decline in growth was not necessarily a big surprise to the market. Analysts were expecting about 52 cents in earnings per share. So the company's reported figure only missed expectations by about a penny. Q2 revenue was more or less in line with analyst expectations. NVIDIA did provide guidance for Q3. The company's expecting revenue in the range of $5.9 billion. And this would equate to a decline of 12% sequentially from the most recent quarter, Q2, and 17% decline year over year. When we look at the numbers by segment, we can see that NVIDIA's two most important end markets are data centers, which made up 57% of revenue, and gaming, which is 30% of revenue. It's really gaming where the company is experiencing weakness. Gaming revenue was down 33% in the second quarter to about $2 billion. Data centers, on the other hand, continue to perform very well, with growth of 61% to $3.8 billion for the quarter. But the weakness in gaming is expected to persist into Q3, and this is why revenue for that period is expected to decline. Another thing that we need to consider with NVIDIA is the situation in China. There are two issues with China. One is the government's zero COVID policy, which has caused widespread disruptions in the economy, in China's economy this year. And this has impacted the financial performance of many semiconductor and computer chip companies. Another is China's relationship with Russia in reference to the current Western sanctions against Russia. On August 31st, NVIDIA filed an 8K form with the SEC, and they disclosed that they had received notice from the US government that they needed to curb sales of some products which were suspected of reaching Russia through China. Other chip companies also received the same notice. It's unlikely, it's unknown what financial impact this specific notice is going to have on NVIDIA and their financial performance. But China is an important market for NVIDIA. Last year, the company estimated about $7 billion or 26% of NVIDIA's revenue was connected to China. So in conclusion, there is a lot that I like about NVIDIA in the long term. Its innovation in the GPU space is really unparalleled. And this has allowed the company to capture 80% of the share of the discrete GPU market. This is critical hardware that is used in AI systems, including autonomous driving and also data centers. And we're very impressed to see that the company is continuing to grow its data center business as well. So when we look long term, when we're looking 3 to 5+ years in the future, all of the growth drivers of this company remain well intact. In the near term, however, there are uncertainties, and the guidance for Q3 indicates that that the financial weakness is not completely behind the company. So right now, I would classify NVIDIA as a short-term hold, long-term buy. For people looking 3 to 5 years in the future, I continue to see this company as one of the top performers in the tech market. You could start building up a position now potentially, but I'd probably start off with a quarter, half position, and then potentially add more down the road as the company comes out with more quarters. In the short term, looking the next 2 to 6 quarters, I'd say there's a lot of uncertainty. And until we start to see the revenues and the earnings grow again, or at least some of these uncertainties behind the company, I would be a little reticent about taking a full position in the stock right now.